Well, just when you didn't think it could get any worse, interest rates continued their climb this week, and we are near 6.3%, maybe popping a little over that for VA as we start the week, and conventional about 6.8%. So not looking good right now, and the prognosis isn't much better, but I'm the eternal optimist, so we're going to talk about some positive things too. So let's get into the housing market update. First off, we got prices. Prices are still up. It depends on where you're at. We always talk about location. In the housing market, that's the same true today as it was yesterday. Inventory is pretty steady right now. Not really going up a lot. You're seeing a little more action, but it's not enough to really move the market in a positive way. But inventory, that's pretty steady. And rates, yeah, we are near one-year highs. The last time rates were this high was almost a year ago in August 2025. Now, as we look at some of the headline news this week, we had some great inflation reports come out this week, and that was really good for interest rates. If it wasn't for those solid reports, man, rates would have been a lot higher. Pending home sales, no surprise, they moved lower. Home builder sentiment, dude, home builders are not happy campers right now. Their sentiment, they're like Eeyore right now. They got this black cloud over them. But you know what the funny thing is, the new home construction report actually picked up. So go figure. And then finally, we'll take a look at rates. VA rates ended near one-year highs. All right, inflation reports. This week, we got the CPI, the Consumer Price Index, which is basically the inflation for the common Janes and Joes like you and me. And it was much cooler than expected at 0.4% decline on the headline. We went down to 3.5%, so that's positive movement. The core is what matters most, and that dropped from 2.7 down to 2.6. So that was good. So what does that mean though? We're still, annual core, we were near at 2.6. I think we were at 2.9 last month. But at 2.6, that is near a 5-year low for core inflation, but still not at the 2% that we want. But you know what? It's moving in the right direction. And wholesale inflation was the second report that came out, the PPI. And that showed inflation down as well, 0.3% down, better than the estimates of being flat at 0. And, across PPI and CPI, almost two-thirds of the reason for the inflation drop was gas prices coming down. Let me think. Why are gas prices up in the first place? Oh yeah, Iran. Once we get through that, gas prices should come back down. But we're still kind of messing around over there, and that is definitely not having a good impact on mortgage rates, on fuel prices, fuel and oil prices. And I say this all the time, one good report does not make a trend, and we've got to see what's going to happen next month, because really gas prices have come down over the course of the last month, but they're starting to go back up again. Not a lot, but still going up. So you can expect to see an uptick in inflation overall in the next reading in July. All right, let's take a look at new home construction. We had a big rebound after a horrible May. Starts were up 19% after being down 15% in May. Now, it leads to the question, was May a one-off? Was that just a bad report and the June report a better report? Could be, but I will also tell you that all of the increases in new home construction were in the multifamily realm, not in the single family home realm, which for people who own single family homes, that should be positive to you, because less supply, more demand means your home prices will stay steady in that single family home realm. So good news for single family homes. Completions up 3.3% month over month and up 1.5% year over year. So that's positive news. And we'll take a look at the home builder sentiment. I told you, man, it can't get any worse for home builders. Well, yes, it can. Hold my beer, says the economy. Home builders are not happy. They're crying. They got tears in their beers. Buyer traffic down to 23, from 25 down to 23. That's about as negative as I've ever seen. Future sales expectations 45 down to 43, and current sales expectations from 38 down to 37. All right, again, we are near an all-time low in home builder sentiment. That is not good. And the reason, let's face it, it's affordability challenges, rising construction costs, and a buyer that's saying, man, I ain't buying. I'm not buying right now. I'm too afraid of what's going on. I'm spending all my savings on just surviving, so I don't have that down payment anymore. So really, just a home builder sentiment, it's warranted. Their sentiment, their negative sentiment is warranted at this point. Now let's take a look at pending home sales. Kind of going back to what we were talking about with the inflation and with the home builders. We had a big drop after a positive May. In May, you had people who were shopping in March and April. They hadn't really been impacted so much by the rise in the fuel prices and rise in inflation. Well, June, that's taken into account now. Hey, these people were shopping. You have fewer people shopping in April and May. And you know what? This is what we can expect to see moving forward, I think, with the pending home sales down 5.4% month over month. The year just a tad negative. Current sales pace dropped from 4.17 million down to 4.09 million, which again is historically low. We need 5 million pending home sales a year to really meet the demand based on demographics. And again, I do think that it is the higher rates that are taking a toll on buyers. You saw mortgage apps were down this week. Certainly mortgage refinance are down. Refinance applications are down too. So not a very positive report for pending home sales. And quite frankly, I expect to see more of the same when we get July's report out. Although I tell you what, I'm not negative Nelly on. I got more people buying right now than I've had all year. I mean, they're out. Offers are going in. I'm meeting with 4 clients today to discuss their pre-approval, because we do what I call a pre-approval plus. So I don't just tell you what you're pre-approved for. I sit down with you and I walk you through your numbers and I help you figure out what your budget is so that you shop smartly and you shop with confidence. Anyway, so that's what I'm doing today. So again, this is across the country and really, even in Oahu, but I will tell you this, I have more buyers out right now than I've had all year. I talked about this previously with lack of funds for down payments. Well, I tell you what, one way to get those funds, gift funds. I know I see gift funds being used for VA loans. You can use them for conventional loans. You really use it for just about every type of home loan. You just have to have proper documentation. If you're the gifter, you certainly need to talk to your CPA to find out what the tax implications are for your gift funds. But I see it all the time. The key is don't surprise your lender and come in with gift funds at the last minute, because we do have to verify all funds. We have to get a letter from the gifter. So it is it's not a laborious process, but there are some things that need to be put in place for you to use gift funds. But I tell you what, it is a great way to help a young home buyer buy their first home. And parents, grandparents, uncles, you name it, you can help your family members buy their first home using gift funds. So don't be afraid to have that conversation. Maybe the conversation is no, but at least you had the conversation when you're talking about gift funds. And gift funds, they can't be, I'm going to loan you the money, but we'll call it gift funds. No, you actually sign a document stating that these funds there's no requirement to repay these funds. And you know what? There's this thing called mortgage fraud, and nobody wants to get involved with that. That is like $1 million fine and 20 years in prison. So, and everybody signs that in a transaction. So, make sure they're gift funds. But man, they're a great tool to use to help you buy a home. All right, VA rates are up for the week. We are back near 1-year highs. As you can see, really the 1 year is all the way on the left side. In August, we were at about 6.4, just over 6.4%. We're now at 6.3%. No bueno. And, again, just basically what's going on in the Strait of Hormuz right now. Us attacking Iran, Iran attacking us, Iran attacking shipping. Just a lot of volatility over there right now, and that's negatively impacting mortgage rates. The other thing that has not helped mortgage rates this week, though, it's Fed chatter. All right, I was hopeful that Fed Chair Warsh would be able to shut up his people and get them to stop talking, because every time they talk, they impact rates. And we had 2 Fed presidents or Fed governors talk this week. The one in Dallas, and then Fed Chair Waller or Fed Governor Waller talk about inflation being too high and how they need to raise the Fed funds rate. And you know what? I mean, that is an option, but man, that's not a very good option. Because basically it's kind of like if there's a fire, you got a stove fire in your house, all right, you got a small fire in your house, a trash can fire in your house. You can put that fire out by filling up the entire room. You fill up the entire house with water. That's one way to put out the fire, but it'd probably be a lot easier just to use an extinguisher and minimize the damage. When you raise the Fed funds rate in the current environment that we're in, yeah, inflation will come down, but there's going to be a lot of devastation along the way. So really, I think their claims are unwarranted. I think they need to rely on the reports that come out, and Fed Chair Warsh needs to get a handle on his peeps and tell him to shut the F up and just talk about the government, talk about the economy, talk about the actual numbers, not their prognosis for the numbers. Nobody wants to hear that negative news, especially when you're probably not going to raise the Fed funds rate anyway. And quite frankly, I do not think that the Fed is going to raise the Fed funds rate at the next meeting. Not as long as we're at war. It's not necessary. It's not warranted. Again, we don't need to fill the entire house up with water. Let's just keep using the extinguisher and taking care of it piece by piece, and we'll get there. Again, this is not one of those instances where short-term pain is long-term gain. That's a lot of pain. That could stop everybody. And the housing market's already in recession, folks. It's been in recession for 4 years. And Fed Chair Warsh actually mentioned that in his testimony to the Senate. The housing market is lagging because of higher interest rates, and he wants nothing more than to see mortgage rates come down. But it's very difficult in this environment for that to happen. There you have it. Next week, not a lot of news next week. So again, the problem with that is now we're relying on what's going on in the world order, and two, what are these Fed presidents and Fed governors going to say? The more they talk, the worse it is for rates typically. So, and what I typically see is when there's not a lot of economic news coming out, interest rates go up because there's no good news to bring it down. That's all I got for you guys this week. Have a great weekend. Aloha.